Aditya, Bhave, are tariffs inflationary or disinflationary or deflationary ultimately? Do you know?
I 100% agree with Steve. It really depends on the size of the uncertainty shock, right? So tariffs are stagflationary, but there's also, it's not just what they said, right? It's how they said it. And the manner in which trade policy has been released has been, a little bit disruptive for businesses, right? So there's a lot of uncertainty right now, and there is a state of the world where that uncertainty shock actually outweighs the stagflationary impact of tariffs, and in that case, tariffs will be disinflationary. But what we heard from Powell right now was hawkish. There's no doubt about that. Steve talked about the analogies to 2021, 22. Here's another one. Powell said, and this for me was the most important part of his prepared remarks, he said that you cannot have an extended period of full employment without price stability. If you're a Fed nerd like me, you remember that he was saying the same thing to justify the previous hiking cycle, right? Remember, they were hiking through what was in real time a technical recession. But the Fed stayed the course and focused on price stability, and we think they're stuck. We think they're going to do the same thing, at least in the near term, this time around.
So, Aditya, and I have been very vocally critical of the Federal Reserve at the ends of COVID or the middle of COVID because I thought they kept stimulating. They contributed to inflation by keeping rates too low for too long, and they stimulated, in my opinion, nobody cares, except Powell's talking about COVID-related or COVID-similar impacts from tariffs, meaning supply chain disruptions. Will the Fed and Jay Powell act the same as they did during COVID, if that's the case, i.e. stimulating, or do you think they changed their behavior / learned from COVID, and some might say mistakes, who knows, and are going to act differently this time?
I think it's more the latter. So if you think about the supply chain disruptions, that was not during the period when the Fed was stimulating. That was when the Fed reacted very aggressively, perhaps a little bit late, maybe a quarter too late, but they reacted very aggressively. They raised rates by 425 basis points in 1 year. Now, I don't think they're going to do that again, but the case to stay on hold right now is pretty strong.
So, Steve, what do you think? You know Jerome Powell personally. What do you think he's going to do?
Well, I want to make one point off of what Aditya said, which is that notice that the Fed chair is not talking about rate hikes here. Some of his colleagues on the Federal Market Committee have kind of hinted at that. Powell really wants to stay put. He wants to use what he believes to be existing modestly restrictive policy in order to address whatever is coming from inflation. And by the way, a little bit of Fed speak in order to do that. Talking tough now perhaps creates the possibility that the Fed won't have to hike later by making clear to markets, to companies, to consumers that the Fed will not tolerate higher inflation. But I agree with what he said about the importance of elevating inflation to the relative importance to employment the way he did back when he was hiking rates strongly. So I think the outlook here is the Fed just has to wait and watch and take a look at how things pan out. It is interesting that the tariffs have created a very unusual situation for the Federal Reserve. Normally, Brian, we would look for the dollar to appreciate in a sense of a country erecting trade barriers, especially the reserve currency that would limit the supply of dollars abroad. That's why the dollar would appreciate. But the dollar has actually gone the other way, and it has depreciated relative to most major currencies. That actually creates a secondary inflationary source, maybe not a big one, but it's something worth watching. That if we were a third world country, Brian, just real quickly, and we were facing this kind of depreciating currency, the central bank might be forced in that instance to be raising interest rates. We're not either, but I'm just saying that's the situation.